Hello everyone, welcome to the 210th episode of me learning how to trade in Forex. So in the last episode we started off going through the 7 currencies worth more than the USD. So the price of a currency is the rate at which can be exchanged for another currency, aka the FX rate. The value of the currency is its purchasing power, so the amount of goods and services that can be bought with a unit of the respective currency. There's two basic types of exchange rates, fixed and floating. Fixed exchange rate is a rate set and maintained by a country's government or central bank. The rate is pegged to some value such as gold or another currency like the USD. So this system aims to keep the value of a country's currency stable. A floating exchange rate is a rate determined by the foreign exchange market through supply and demand. So a currency's exchange rate can fluctuate based on economic factors such as inflation, interest rates, and geopolitical events. So these factors will increase or decrease the supply and demand for that country's currency, which will affect its exchange rate. So factors that affect the currencies: interest rates. If a country's central bank raises interest rates, that country's currency becomes more attractive as investors can earn more on their investments in that country. As demand for that currency increases, so does its value. Inflation rates. A country with lower inflation rates compared to others will see its currency appreciate. Lower inflation rates imply an increase in the purchasing power of its currency, which investors would find attractive. Economic performance. If a country's economy is performing well with strong growth and high productivity, then its currency is likely to appreciate. If the economy is in a recession, the currency is likely to depreciate. Political stability and performance. Countries that are stable, have transparent legal systems, secure and politically peaceful are considered safer investments, which leads to currency appreciation. The balance of trade is the difference, not difference. So the difference between a country's exports and imports. If a country's export is larger than imports, so trade surplus, its currency is expected to appreciate as higher demand from foreign entities purchasing its goods and services. Public debt. Countries with high levels of public debt appears less attractive to foreign investors due to the high risk of default, as well as the possibility of inflation, which can cause the currency to depreciate. Speculation. If traders believe a currency will move in a certain direction, they will trade accordingly and may cause the currency to go up or down. And then intervention from central banks. So central banks can intervene in the foreign exchange market to try and stabilize or devalue their own currency through buying or selling their own currency or foreign currencies. So then we went for some of the examples. So the 7 currencies worth more than USD. So Swiss franc. So 1 CHF is equal to 1.5 USD. So I remember in the end of the last video saying that I was going to try to redo this again to be more clear on this. So let me just reread through this again. So the Swiss franc to USD fluctuated between 0.9862 and 1.13 from June 2022 to June 2023. The lowest exchange rate was observed on November 3rd, 2022, when 1 CHF was equivalent to 0.9862 USD. The highest exchange rate over the period occurred on May 4th, 2023, when 1 CHF was equivalent to 1.13 USD. Average exchange rate over this period was 1.06. So I think this is the time. So this is the start of 20. It's hard to write with the mouse, so let me just zoom in. Start 2022, and let's just say this was the start of 2023. CHS fluctuated between lowest exchange rate observed on November 3rd, 2022. November 2022, so somewhere around here. So this would be November. So this is the lowest exchange rate, which was May 4th, so 0.9862. Lowest exchange rate, so yeah, it was, I should say, going down. So this is the lowest points. about here, which was 0.9862. So 0.9862. That 2 is horrible. Oh my. 62. Highest was May the 4th, 2023. Highest was May the 4th, 2023. So May would be somewhere around here, let's just say. So this will be May. What was that? 1.13. So 1.1. Whoa. 1.3. Let's just assume that it was a smooth uptrend, which it probably wouldn't be. But just for the sake of things, make it easier. Average was 1.06. Okay, from June 2022 to June 2023, Switzerland's economy experienced a slowdown, the GDP growth decreasing from 2.1 in 2022 to an expected 1% in 2023. Let's add another timeline here for the GDP. So we got this. This is still 2023. 2022 goes here. Growth decreasing from 2.1 in 2022 to an expected 1% in 2023. Is that 2022? When is that GDP measured? GDP growth decreasing from 2.1% in 2022 to an expected 1% in 2023. Decreasing from 2.1% to an expected 1%. So GDP, let's just say, is decreasing because it is predicted to. So what kind of GDP is gonna like that. High global economic uncertainty, inflation which peaked at 3.5% August 2022. So August 2022. Let's have another row for inflation. Here. Pink for inflation, August 2022 will be somewhere around here. Aug 2022, 3.5% August 2022. So I'm assuming inflation went like that. It peaks here, 3.5%. Was reduced to 2.6% by April 2023. May, so April will be literally around here. Excuse me. It's around here. So that'll be that. And it's gone down. May 2023. And it's further projected to decrease to 2% by the year end. So it's going to keep going down. So further reduce inflation by 1.9% in 2024. Cool, so it's the main one, of course, the currency exchange rate. So got loads of stuff happening here. We've got the GDP from 2022 to 2023 decreasing throughout the year, but then we also got the inflation decreasing as well. So inflation peaked in August 2022 with 3 point something percent, I think it was 3.5%, and then in that year 2022 November we saw that CHF and USD was observed the lowest exchange rate, so 0.9862. So we got high inflation and we got low GDP. So both not good factors for having a strong currency. Therefore, USD was worth more than CHF back then in 2022. Going forward into 2023, in April we saw a decrease in inflation, so from 3.5% to 2.6% in April. So inflation is going down, which is a good sign for the exchange rate. So it shows that it's becoming more attractive to investors as inflation goes down, right? And then we also saw what happened to the GDP growth to an expected 1% in 2023. Well, there is a GDP decrease still of projected 1%. So yeah, that's kind of a negative, I think. But so despite these economic challenges, Switzerland maintained political stability, continuing its dialogue with the EU regarding single market accession. Switzerland was still able to do its own thing, and since the inflation was decreasing to 2.6%, and then was further projected to decrease to 2% by the end of 2023, and then further reduced from that to 1.9% in 2024. So inflation is going way down. The currency, I guess the investors see this as a good sign to start investing or buying CHF again. So as more demand increases, then the currency value is also going to increase as well. So now it's going to take more USD to get one CHF, because CHF is strengthening against the USD. Yeah. So investors saw in April that the inflation rate is decreasing. Oh, very nice. Everyone starts buying CHF, which caused it to rally to 1.13. And yeah, that's that. I think I've explained it pretty well. Yeah, cool. So these factors, economic performance, inflation, monetary policy and political stability, likely influence the Swiss franc's movement during this period, with the economic slowdown and inflation potentially exerting downward pressure, and the central bank's policy rate hikes and political stability providing support. So preventing it from becoming less valuable. Right, Caymanian dollar. Once KYD equals 1.21 USD. The Caymanian dollar to the USD exchange rate remained stable at 1.2 from June 2022 to June 2023. There's no volatility during this period, indicating a stable economic environment in the Cayman Islands. Right, Cayman Islands. This stability could be attributed to the Cayman Islands fixed exchange rate policy, where the value of the Caymanian dollar is pegged to the US dollar at a fixed rate. From June 2022 to June 2023, the Cayman Islands demonstrated strong economic performance, with a real GDP growth of 3.7% in 2022. Aided by a rebound in tourism, it is expected that this growth will continue, with an average growth of 2% projected for 2023 to 2025. The Cayman Islands' debt to GDP ratio was a low 8.9% at the end of 2022, significantly lower than the 43% median for similarly rated countries. That is very low. Also, the country maintained a stable political environment, with the country's institutions exhibiting effective policy making. These factors, along with the country's resilience to global efforts against tax evasion, likely contributed to the stability of the Caymanian dollar during the above-mentioned period. Cool, so British pound 1 GBP equals 1.28 USD. The British pound to USD exchange rate fluctuated between $1.06 and $1.28 from June 2022 to June 2023. The lowest exchange rate was observed on September 28, 2022, when 1 GBP was equivalent to 1.06 USD. The highest exchange rate occurred on June 16, 2023, when 1 GBP was equivalent to 1.28 USD. From June 2022 to June 2023, the United Kingdom's economic performance was characterized by a broadly flat GDP in the first half of 2023, with underlying growth expected to be higher than headline GDP growth due to temporary factors such as strikes and an additional bank holiday. This underlying growth was projected to be roughly 0.2% per quarter in the first and second quarters of 2023, which is low when compared to historical average growth rates. In the second quarter of 2023, it was around 0.5% stronger than projected in February 2023. Interest rate movements during the period saw the Bank of England, the Central Bank of the UK, increase its bank rate by 0.25% to 4.5% in May 2023. The market implied path for the bank rate peaked at around 4.75% in the fourth quarter of 2023, before ending the forecast period at just over 3.5%. These factors contributed to the movement of the British pound during the period. The recent appreciation of GBP put some downward pressure on UK's import price inflation and over time on CPI inflation, Consumer Price Index. So the recent appreciation of GBP put some downward pressure on UK import price inflation. So import price inflation is going down. Is that what they're saying? Downward pressure. And over time on CPI, Consumer Price Index inflation. Jordanian dinar 1 JOD equals 1.41 USD. The Jordanian dinar to the USD exchange rate remained stable at $1.41 from June 2022 to June 2023. There was no volatility during this period because the Caymanian dollar, or because like the Caymanian dollar, the Jordanian dinar has been pegged to the USD. From June 2022 to June 2023, Jordan's economic performance was characterized by a GDP growth of 2.5%, driven by a robust private spending, despite higher interest rates. The unemployment rate eased to 21.9% in the first quarter of 2023, and inflation receded to a 15-month low of 2% in May 2023. The Central Bank of Jordan maintained its re-discount interest rate at 8.25% in June 2023. Re-discount interest rate. Okay, when it comes to political stability, Jordan continued to promote economic inclusion, develop sustainable and municipal infrastructure and green energy, and strengthen competitiveness and resilience. The country also focused on diversifying access to finance and fostering innovation, strengthening the capacity of corporations and other business enterprises, and improving the overall business environment. Important. Most major capitalist countries pegged their currencies to the USD under the Bretton Woods system in the mid-20th century. In the early 21st century, many nations in the Caribbean and the Middle East still tied their exchange rates to the dollar. Omani Rial, 1 OMR equals 2.6 USD. Oman is yet another country that pegged its currencies to the USD at a fixed exchange rate. So 1 OMR equals 2.6 USD. The Omani Rial has maintained its value against the dollar due to Oman's oil production and its historically tight monetary policy and the financial restrictions. Over the period June 2022 to June 2023, the OMR experienced little issue with its pegged currency. This can be a result of the country's economic performance, interest rate movements, and political stability. The economic performance of Oman during the above-mentioned period was marked by a steady growth rate, coupled with the government's efforts to diversify the economy and implement fiscal consolidation measures. Politically, Oman remained stable throughout the period with no major incidents reported that could have affected the value of the rial. Press release: IMF staff concludes staff visit to Oman. This political stability, coupled with the steady economic performance and stable interest rates, likely contributed to the stability of the Omani rial's peg. Bahraini dinar. The Bahraini dinar BHD was pegged to the USD at a slightly higher value than the Omani rial. From June 2022 to June 2023, Bahrain experienced strong growth in line with other Gulf Corporation Council countries. Continued fiscal reform momentum and high oil prices improved fiscal and external balances. The economy grew by 4.9% in 2022, driven by 6.2% growth in non-hydrocarbon GDP. Driven by 6.2% growth in non-hydrocarbon GDP, while hydrocarbon GDP contracted by 1.4%. Non-hydrocarbon growth was driven by public, financial and hospitality services and manufacturing. Okay, so 6.2% growth in non-hydrocarbon. So hydrocarbon, is that the oil? So oil GDP contracted by 1.4%, whereas non-oil GDP experienced a 6.2% growth. And this growth was driven by public, financial and hospitality services and manufacturing. GDP growth is projected to moderate to 2.7% in 2023, with non-oil GDP growth by 3.3%, reflecting fiscal consolidation, higher interest rates and a base effect from 2022 strong growth. Consumer Price Index inflation accelerated from minus 0.6% on average in 2021 to 3.6% in 2022. With economic recovery well underway, ongoing fiscal reforms and higher oil prices, the state budget deficit declined significantly, narrowing to 1.2% of GDP in 2022, from 6.4% in 2021, while the overall fiscal deficit declined from 11% to 6.1% of GDP. So Consumer Price Index inflation accelerated from minus 0.6% on average in 2021 to 3.6% in 2022. Consumer Price Index is a chief measure of inflation, the changing prices of groups of consumer goods or services. So inflation basically. Inflation accelerated from minus 0.6%. If inflation was negative, then was the economy in a recession then? On average, from 2021 to 3.6% in 2022. So inflation going up, with economic recovery well underway. Yes, so it used to be in recession, now it's gone back to positive, so inflation. Ongoing fiscal reforms and higher oil prices, the state budget deficit declined significantly. So the deficit declined significantly, narrowing to 1.2% of GDP in 2022, from 6.4% in 2021. That is a significant, that's like what, 5.2% decrease? So the state budget deficit, so they used to be missing 6.4% of GDP, now they're only missing 1.2% of the GDP, while the overall fiscal deficit declined from 11% to 6.1% of GDP. So pretty much 5% decrease. Government debt declined to 117.6% of GDP in 2022 from 127.1% of GDP in 2021. Bahrain's current account improved markedly and posted its largest surplus in decades, estimated at 15.4% of GDP in 2022, up from 6.6% of GDP surplus in 2021. So there's more exports than imports basically. Yeah, exports, if the export is larger than import, if the country's exports are larger than imports, so they're exporting more than they're importing in. Given the strong economic performance and fiscal stability, it is likely that Bahrain's peg will remain for the foreseeable future. Kuwaiti dinar. The Kuwaiti dinar KWD to USD exchange rate fluctuated between 3.22 to 3.3 from June 2022 to June 2023. The minimum exchange rate was recorded on October 20th, 2022 at $3.2, while the maximum exchange rate was seen on March 18th, 2023 at $3.3. The average exchange rate during the period was $3.26. During the above-mentioned period, the Kuwaiti dinar fluctuation could be a result of various economic and political factors. Kuwait Kuwait's economy largely recovered from the pandemic, with growth surging to 8.2% in 2022, primarily driven by high oil production and prices. Non-oil growth also rose to 4% in 2022, reflecting strong domestic demand. However, the real GDP growth was projected to fall to 0.1% in 2023 due to agreed OPEC plus oil production cuts and slower external demand growth. So they're producing oil production cuts, so that they're producing less oil, which leads to slower external demand growth. The fiscal and external balances strengthened due to higher oil revenues, but the overall fiscal surplus was projected to drop to 6.9% of GDP in 2023 and fall steadily thereafter into deficit over the medium term. The Central Bank of Kuwait also implemented policy rate hikes to contain inflation and maintain financial stability, which could have influenced the dinar's value. The country's approach to fiscal policy, monetary policy, and structural reforms, as well as its response to global decarbonization trends, could have played a role in the movement of the Kuwaiti dinar over the period. Okay, so frequently asked questions. What affects a currency's exchange rate? Broadly speaking, the exchange rate for countries with free floating currencies is usually affected by the strength of a country's economy. In addition, though, exchange rates are relative, meaning they depend on the country with which you're comparing with at any given time. So economic conditions and policies, e.g. concerning inflation, interest rates, debt, and in the respective countries can affect the exchange rates. Exchange rate for countries with free floating currencies is usually affected by the strength of a country's economy. In addition, though, exchange rates are relative, meaning they depend on the country with which you're comparing with any given times. Note that exchange rates are relative as it depends on the country with which you're comparing with at any given time. So economic conditions and policies, e.g. concerning inflation, interest rates, debt, are in the respective countries can affect the exchange rate. What is the exchange rate for the CAD and the USD? As of July 2023, one CAD will get you about 0.76 USD. Looking at the other way around, if you'll be traveling to Canada and need some local currency, you'll be able to get 1.32 CAD for just 1 USD. What is the most powerful currency in the world? USD is arguably considered to be the most powerful or strongest currency in the world. There are a variety of reasons for this. The US economy and government are consistently stable and strong, and has been for a long time. The USD makes up the majority of the world's currency reserves. It is a trusted currency and accepted across the globe. What is a commodity currency? A commodity currency refers to the currency of a country whose economy depends heavily on the exports of certain raw materials or commodities. The value of a commodity currency is closely linked with the price of a particular commodity. Some examples include the Canadian dollar, the Australian dollar, and New Zealand dollars. The commodity currency refers to the currency of a country whose economy heavily depends the exports of certain materials or commodities. The value of a commodity currency is closely linked to the price of a particular commodity. The value of a commodity currency is closely linked with the price of the particular commodity. Some examples include the CAD, the AUD, and the NZD. Bottom line, the price of a currency, often referred to as exchange rate, is the rate at which one currency can be exchanged for another, determined by supply and demand dynamics in the foreign exchange market. The value of a currency, on the other hand, refers to its purchasing power, or the amount of goods or services that can be bought with a unit of the currency. Factors affecting the value of a currency include inflation, interest rates, political stability, economic performance, and market speculation. While the USD is often used as a benchmark due to its status as the world's reserve currency, other currencies can be valued more than USD if they have stronger purchasing power, or if their countries have more favorable economic conditions. Very nice. So next one, Forex trading strategy. So what is a Forex trading strategy? A Forex trading strategy is a technique used to determine whether to buy or sell a currency pair at a certain time. Forex trading strategy is a technique used to determine whether to buy or sell a currency at a certain time. Forex trading strategies can be based on technical analysis or fundamental news-based events. A trader's strategy is usually made up of trading signals that trigger buy or sell decisions. A trading strategy is usually made up of trading signals that trigger buy or sell decisions. Forex trading strategies are available on the internet, or they may be developed by traders themselves. So key takeaways: the Forex market is the largest market in the world, with daily volume around 6 billion USD in November 2023. Forex trading strategies involve the use of specific techniques to generate profits from the purchase and sale of currency pairs in the Forex market. Manual automated tools are used to generate trading signals in Forex trading strategies. Traders working on their own trading systems should backtest their strategies first before committing capital. Paper trade them first to ensure they perform well. So basics of a Forex trading strategy. Forex trading strategies can be either manual or automated methods for generating trading signals. Manual systems involve a trader sitting in front of a computer screen looking for trading signals and interpreting whether to buy or sell. Automated systems involve a trader developing an algorithm that finds trading signals and executes trades on its own. The latter system takes human emotion out of the equation and may improve performance. The trader should exercise caution when purchasing off-the-shelf Forex trading strategies because it's difficult to verify their track record, and many successful trading systems are kept secret. Tip: one way to learn to trade Forex is open a demo account and try it out. True. Creating a Forex trading strategy. Many Forex traders begin with a simple trading strategy. They might notice that a specific currency pair tends to rebound from a particular support or resistance level. They might then decide to add another elements that improve the accuracy of those trading signals over time. They might require that the price rebounds from a specific support level by a certain percentage or a number of pips. An effective Forex trading strategy requires several components. Effective Forex trading strategy requires selecting the market, position sizing, entry points, exit points, trading tactics. So selecting the market, traders must determine what currency pairs they want to trade and become experts at determine what currency pairs to trade and become experts at reading them. Position sizing, determine how large each position is to control for the amount of risk taken for each individual trade. So determine how large each position is to control for the amount of risk taken in each individual trade. Entry points. Traders must develop rules governing when to enter a long or short position in a given currency pair. Develop rules governing when to enter a long or short position in a given currency pair. Exit points. Develop rules telling them when to exit a long or short position, as well as when to get out of a losing position. Develop rules governing when to exit a long or short position, as well as when to get out of a losing trade. Trading tactics. Traders should have set rules for how to buy and sell currency pairs, including selecting the right execution techniques. Set rules for how to buy and sell currency pairs, including selecting the right execution techniques. Technologies, right execution technologies. Important, you can see if your broker offers high leverage through a margin account if you have limited capital. Any broker with a wide variety of leverage options should do so, if capital isn't a problem. A variety of options lets you vary the amount of risk you're willing to take. Less leverage and thus less risk may be preferable for some individuals. I'm going to leave this episode here then. In the next video, we're going to carry on with when is it time to change strategies. Bye bye.